and Assalamualaikum. My name is Anissha Nabilla Binti Jamal. I'm a presenter from Group A4. In this presentation, I will explain more details about Ifrs 15 about revenue from contract with customer or revenue recognition. Okay, this is our group members A4. The first one is Ahmad Amri bin Muhamad with metro numbers 273085. And next one is me, Anissha Nabilla Binti Jamal with metro number 272837. And next is Zahirah Binti Muhammad Zamri with metro number 272844. And Vaitheswary anak perempuan Murugan with metro number 272856. And the last one is Rabiatul Adawiyah Binti Ramlee with metro number 273113. Now I will continue our presentation. Firstly, I will talk about what we will get from this presentation. As we can know, Ifrs 15 can be only adopted starting 1st January 2018. Ifrs 15 is a collection of principles that a company must follow when record revenue and cash flow derived from customer contracts. Following Ifrs 15, a company records revenue when the promised good or service is the same amount with the consideration expected in exchange for such goods or service to customer. Next, I will explain about theories development Ifrs 15. It was divided to 3 theories. The first one is asymmetric information theories, second is behavioral decision theories, and the last one is uniqueness versus uniformity theories. Okay, first, asymmetric information theories. Asymmetric information theories is like financial analysis. An auditor might be able to solve problems in the market by giving people more information about what is going on in the market. There's a lot thing to be covered about moral hazard and adverse selection in this session because it can affect people who help people find information. Most people agree that under Ifrs 15, more complicated business models are more likely to be manipulated to make more money. Many people also say that Ifrs 15 has made them pay more attention to customer contract. Next is behavioral decision theories. Because of the new revenue standard, Ifrs 15, if a company makes money, it can be hard to find out how much money they make actually. The information provided by Ifrs 15 is more accurate and helps business better understand both how they make money and how they run their business. Those who have a lot of knowledge and skill in financial accounting are more likely to get the extra money and didn't have a big impact on their understanding of the firm revenue contracts than the people do not have a lot of knowledge and skill. The last theory is uniqueness versus uniformity. In accounting theory and practice, there's a lot of talk about how to make sure that everyone is treated the same. Under Ifrs 15, business and industry will be able to compare each other more easily. There was a thing that some people thought was a good move, but others thought it didn't do much. Different interpretation of International Financial Reporting Standard 15 could make it hard to compare business and industry all over the world because of different opinions about the share their information. Next, I will talk about the main parties involved in the development the standard Ifrs 15. First is the International Accounting Standard Board and the Financial Accounting Standard Board FASB. It began a joint revenue project in 2002 to eliminate inconsistencies and weakness of existing revenue requirements and improve comparability of revenue recognition practice across entities, jurisdictions, and capital markets. In July 2008, the board published the Ifrs 15 agreement for the construction of real estate. September 2015 was the date set for Ifrs 15 deferred by the board of directors, and the implementation date was pushed back to the first day of January 2018. Some of Ifrs 15 revenue standards have been clarified by the International Accounting Standard Board (IASC) through clarification for revenue from contract with customer issued in April 2018. The International Accounting Standard Board (IASB) and the Financial Accounting Standard Board (FASB) have developed a new accounting standard that is compatible with both IFRS and US GAAP. Next, Department from Accounting or Financial operation, procurement, information technology, tax, treasury, and investor relation, among others, should be involved in discussion and planning to prepare for the implement of IFRS 15. Effectively, project governance will be essential. They discuss about timetables and duties can begin as soon as the various stakeholders have been identified and the roles defined. Last but not least, a vendor should record revenue to accurately reflect the amount of consideration that the vendor expects to be entitled in exchange for the goods or service that the vendor has promised to deliver to customer. This section discusses the nature of IFRS 15, which is a principle-based standard. Basically, a principle-based standard is a standard issued by an international body, the IASB. The practicing countries need to comply with the standard, but they can change the way of implementing the standard according to the needs of their respective countries. There are 5 approaches used in briefly describing the application of IFRS. Next, I will talk about how standards solve problems. The first one is identify the contract. If all 5 of the following conditions are met, IFRS 15 can be used, which is when there is a binding contract between the parties. Each party is entitled to the goods or service to be transferred. Payment terms of this item have been agreed upon. And finally, the contract has been complete and compelled by both parties to fulfill their obligation under it. In this consideration, the customer's ability and willingness to pay their debt is only considered. The price specified in the contract between the seller and its customer will frequently be the primary topic of discussion. Due to the possibility of offering a price concession or reduction, the amount consideration that the vendor eventually expects to be entitled to may be less than the amount of consideration that the vendor expects to be entitled. This situation necessitates the application of IFRS 15 for variable consideration, which provide guidance on determining the customer's ability and desire to pay against the lesser amount. Best used to verify this step is dogmatic basis because guidance is already made by an authority. Step 2. Identify spread performance obligation in the contract. Identifying the contract performance obligation for accounting purpose in step 1 is only the beginning of the process for a company. As an example, let's say you have an agreement with your customer to deliver a product or service or a combination of product and service to the customer that is different from, but similar to, that of another party. This is a performance obligation. This step uses self-evident basis. The statement based on experience before this and observation. A single contract can include multiple performance obligations that are all related to the same thing. Purchasing a mobile handset and connection to a mobile network for 2 years in exchange for 24-month fixed payment is an example of a contract that will be included in an agreement for the purchase of a mobile handset. According to accounting standard, the contract will normally be considered to include 2 performance obligations: the selling of mobile handset on credit and the provision of network service for a period of 2 years, the performance obligation. The good or service specified in each legally contract may be treated as separate performance obligation for accounting purpose, even though 2 contracts between a vendor and its customer may be treated as a single contract in step 1. Next is step 3. Determine the transaction price of the contract. The transaction price is the amount of money that a vendor expects to get in exchange for the item or service that he or she is offering for sale. The sum indicated in the contract is frequently used as a guideline. However, the seller is also expected to take into account its past business practice, and if this indicates that a lesser amount will be accepted. the transaction price will be set at the amount rather than the lower amount. This step uses scientific basis because it researcher about the future to estimate the transaction cost. It's important to note that these forecasts are based on the commodities and services that will be transferred in accordance with the existing agreement. Do not take into account future contract cancellation, renewals, or modification when making their decision. Vendors are also required to consider factors like limiting estimate of variable consideration, including financing, non-cash consideration, and customer payable consideration. Step 4. Allocate the transaction price to the performance obligation. After determining the contract transaction price in Step 3, it's time to allocate the transaction price to each of the performance responsibilities defined in Step 2. If you are trying to accurately reflect what a vendor expects in action for providing distinct goods or service, which make up each identified performance obligation from Step 2, you will want to assign a specific dollar amount to each performance obligation. Each of those performance obligations stand-alone selling price serves as the starting point for allocating those obligations. This step uses dogmatic basis because existing international financial reporting standard (IFRS) provide minimal advice on allocating a transaction price to components, often referred to as the unbundling of contract. IFRS 15 represents a significant shift in approach. As a result, certain business, particularly those in the software and technology sectors, follow the truth guidelines provided by US GAAP, while others did not. Last step, Step 5. Recognize revenue when each performance obligation is satisfied. The step uses scientific basis because it's required to determine whether the risk and reward associated with ownership of a good or service have been passed to a customer in order for revenue recognition to be recorded. In comparison to present practice, one of the most significant differences between IFRS 15 and current practice is that the control creation is now applied to all sorts of transactions involving the provision of good or service. A study of risk and rewards is simply one of a number of elements taken into consideration under the control model, and this may result in a change in the timing and profile of revenue recognition in particular industry. All of a company's assets can be put into use in a variety of ways, from producing goods and services, including public service, to increase the value of others' assets or paying off debts. It is possible to sell them, exchange them, pledge them to secure a debt obligation, or simply keep them in one possession and make contingency plans for future cash flow. If a vendor believes that an asset has been transferred to the customer because of the customer's agreement to repurchase it, that belief is debatable. At the start of the contract, control can be transferred over time for each performance obligation, or it can be assigned a specific time. The obligation is presumed satisfied if a vendor fails to meet an obligation for an extended period of time. The standard development will have some unavoidable constraints due to several factors of difference between countries. Here we will explain some of the limitations in using IFRS 15. Firstly, additional complexity to accounts and other users. They need to relearn the necessary requirements so that they can implement the new standards correctly and accurately as recommended in IFRS 15. Accountants need to analyze the new standard and learn the method used. Accountants need more time to understand IFRS 15 because they must attend seminars, talks, and so on to learn this new technique. As a result, it will put additional burden on accountants as the scope of their works become wider. Secondly, it will raise concern about standards manipulation. IFRS 15 is an international standard issued by ISB without regard to the business environment. and the economic condition of the practicing country. So, most countries will issue their own standard to suit the environment of their respective countries. For example, MFR's 15 revenue from contract is a standard adopted from IFRS 15. This situation can create a situation where the new standard may be altered or manipulated by the practicing country for personal gain. Therefore, the transparency and reliability of IFRS 15 is likely to deteriorate due to the irregularity committed. When standard manipulation occurs, fraudulent activities will occur more frequently in the practicing country. Lastly, limited standard guidance. In this case, IFRS 15 is a new standard that exists and is still being improved upon early adoption. There are still many companies that are learning and understanding these standards before they are fully adopted by them. As the adoption of this standard is still in its infancy, it caused IFRS 15 to face uncertainty in solving problems that may arise when the standard is applied. In addition, it caused difficulties for practitioners to make reference if they have problems related to how to use IFRS 15. This is because the parties involved in developing IFRS are experts from foreign countries. Previously, we have seen some constraints that arise during and after the adoption of IFRS 15. Therefore, we provide some solutions to reduce such constraints as below. Firstly, mandatory accountant to register with MIA or MIA. Governments need to establish a law for accountants in Malaysia to register as a MIA member to help Malaysians overcome the additional complexity to accountants and other users in adopting IFRS 15. By registering as a MIA members, accountants will be categorized as a chartered accountant. So, they need to undergo testing annually to ensure they are exposed to change to end old accounting standards or new standard issue. Besides that, being a member of MIA ensures greater networking between companies that practice IFRS 15 in Malaysia. Secondly, strengthen accounting regulatory bodies, government policies, and court orders. I recommend that accounting regulatory bodies strengthen their monitoring of application of IFRS 15 in practice countries. Accounting bodies such as IASB need to develop auditing standards to control irregularities that occur. This is because audit standards are alternatives that can be used to detect errors that occur in the company when using IFRS 15. These audit standards are also judgments made independently because they are not involved in the management of a company. Legally, action will also be taken against companies that do not comply with policies related to IFRS 15. Last but not least, collaboration development guidelines. IASB is recommended to collaborate with parties. Last but not least, collaboration development guideline. IASB is recommended to collaborate with parties that develop accounting framework in practitioners' countries. This is a good initiative to improve IFRS 15. In addition, collaboration with practicing countries gives the IASB a clear view of what problems they face in practicing IFRS 15. This information will be used to amend an accounting standard according to the suitability of the practicing country. The IASB can also look to previous standard as a framework for developing a guideline. That's all from me. Thank you for hearing our presentation.